Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The best way to contact me is through Discord. My name on Discord is Doug P. And in Bookmap Discord, there's an Options-Doug chat channel that is for content related to this channel, not necessarily just the webinar, but any content, questions, comments related to options, order flow, hedging flow. That's a great place for it, as well as questions during the webinar. So that's Bookmap Discord, the Options-Doug chat channel. And then finally, I'm on X, formerly known as Twitter. My name there is @DougPless. And if you have questions, especially for those of you watching on YouTube, if you have questions after the webinar, Discord is the best place for those questions. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero. Real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, setups can be taken any number of ways. For example, in the S&P 500, trades can be taken with ES futures, SPY shares, SPY options, either naked options or spreads, or SPX options, also naked options or spreads. So again, my analysis based on the options market, setups will be focused on an underlying asset. Setups can be taken any number of ways. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. So please feel free to post your questions and comments. And again, if you, especially for those of you in YouTube, if you have questions after the webinar, the Options-Doug chat channel is a great place for those questions, as well as messages to me, Doug P, in Discord. What I want to talk about today, my agenda for today, I want to go over news items, economic data from this morning. Then I'll go through my positional analysis. Then I'll review some setups from this morning. There were some great setups. And then we'll get to the live market. I'll look at the S&P 500, NASDAQ, and the live market. And if anyone has any stocks they want me to take a look at, please let me know. All right, let's get started with news items for today. So first of all, the big monthly jobs report was out this morning at 8:30 a.m. Eastern Time, and the headline number did come out greater than expected, but I think what was more important to the market, what was driving the market, was the unemployment rate was greater than expected, and that led to an initial bullish reaction that reversed just after the cash open. And then there was also some manufacturing PMI data out at 9:45 and 10 a.m. Both were greater than expected, but still less than 50. So still showing contraction. All right, so that was the data for the week, wrapping up the week. Now let's get to my positional analysis. This is the S&P 500 futures in Bookmap. I'm going to focus on the levels right now as part of my positional analysis, and then we'll talk about setups in a few minutes. Excuse me. All right, so before I take a closer look at this chart, I want to take a look at a larger time frame. This is SPX in a 1-day, 30-day, 1-hour chart. So showing just price action for SPX, the key levels, all based on the options market. So first of all, here's the reversal higher. Excuse me, pardon my voice. The reversal higher after the August 18th options expiration. Remember, that was a very negative gamma concentrated expiration, somewhat evenly distributed between calls and puts, but a little bit more puts. Anyway, with that large negative gamma position, traders were long puts, market makers were short puts, and as that price started to rally, implied volatility drops, those puts lost value, and market makers could buy back their short futures. And then that shift from negative gamma to positive gamma has increased, continue up until yesterday. Gamma notional for SPX was positive 393, still positive today, but a little bit less negative, less positive. So anyway, the shift from negative gamma to positive gamma has continued. That's for SPX. All right, let me point out levels on this chart. So first of all, the dashed purple lines are showing the lower and upper weekly expected move. Notice SPX is trading well above the upper weekly expected move. Then the dashed blue lines are showing the lower and upper daily expected move. And so far, SPX is trading right in the middle of that range. There are also some key Spotgamma levels on this chart. These are proprietary levels from Spotgamma. I'll go over the key daily levels. First of all, there's the 4,300 put wall. That's the strike with the largest net negative gamma that can be expected to act as support. And then the next level up is the 44.95 volatility trigger. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, like SPX is trading now above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue volatility, leading to lower trading ranges and more range days rather than large trending days. And also just above that, the 4,500 level is the absolute gamma strike. That's the strike with the largest absolute negative and positive gamma, and that is the level with the highest concentration of gamma. And then above that is the 4,600 call wall. That's the strike with the largest net positive gamma that can be expected to act as resistance. And note that level did increase from 4,550 yesterday to 4,600 today. So for the last 3 days, the call wall for SPX has shifted higher from 4,500 to 4,550 and now to 4,600, and that is bullish, moving that potential ceiling for price higher and higher. That's a somewhat of a hallmark of a rising market. Positive gamma grind up higher with the increasing call walls from day to day. All right, so those are the expected moves, weekly, daily, as well as the Spotgamma key daily levels. Let's take a look at one other SPX chart, just a one-day chart, to get a sense for the levels that are in play for today. So SPX gapped up above its upper daily expected move and very quickly moved lower. And I'll talk about that more with setups. Then made a push back for the upper daily expected move, did not make it up there. And now SPX traded down almost to the 4,500 level, and it looks like it is stalled right around the 45.10 level, which was noted as support in the Spotgamma AM Founders Note today. Let's take a look at that on Bookmap. So in Bookmap, I have my own cloud notes, and I use my own cloud notes so I can show a variety of levels here. So for ES, here's the upper daily expected move. It's a little bit different than the SPX upper daily expected move. I do calculate those levels separately. Acted as resistance today, just like SPX. Then I do have the SPX levels. There's the SPX 4,500 level. Notice there is a price difference between ES and SPX. It's just a little over 6 today, so I'm just using the closest round number, which is 6. So I'm showing this SPX 4,500 level, the absolute gamma strike, at ES 4506. And I'm also showing SPY levels. There's the SPY 450 absolute gamma strike. Here's that 45.10 level that I was just talking about. And then here is the SPY 451 volatility trigger. That's been an important level today. And after 11 a.m., pretty much acting as resistance. All right, so those are the levels. I have SPY levels, SPX levels, as well as key ES levels, all shown in one column in my cloud notes. So those are the levels in play for today. And so I talked about SPX, the shifts in levels. Volatility trigger shifted higher as well as the call wall. That's bullish. And for SPY, the volatility trigger also shifted higher, and the call wall also shifted higher. So that is bullish for the S&P 500. All right, let's take a look at NASDAQ now. All right, before I take a closer look at this chart, this is the NQ futures. I do want to take a look at a QQQ chart so we can isolate out the QQQ levels. Here's the 380 level, and there's a combo L3 level just below that, and that was the I guess you wouldn't really call it resistance, but price broke below that level, the 380 level. That is at large gamma 1 level. Very important level, large concentration of gamma. Here's the volatility trigger at 378. That level did move higher from 376 yesterday. And now QQQ trading below that level in a negative gamma position if it remains below that level. All right, so those are the QQQ levels. Take a quick look at NDX. and we'll focus on the 15,500 level. That is the absolute gamma strike. And for NDX, that level did shift higher from 15,000 yesterday to 15,500. And also for NDX, the volatility trigger also shifted higher. So NDX still trading above the 15,250 volatility trigger. All right, let's go back to Bookmap. We have the lay of the land with the levels. I again have my own cloud notes. Looks like the QQQ 381. This is just right at the open. 381 as well as the NQ 650 level acted as resistance. And then price broke below the 380 level. Right, so you can see on this chart the QQQ levels, the NDX levels, and also the round number levels for NQ. And we'll talk about setups in a few minutes, and I've talked about shifts in levels. So volatility triggers shifted higher across the board, SPX, SPY, NDX, QQQ. Call walls shifted higher for SPX and SPY, and then for NDX, the absolute gamma strike also shifted higher. So again, we'll talk about setups in a few minutes. All right, let's take a look at gamma notional now, so we can understand how market makers were positioned on the gamma curve at the beginning of the day and how they might react to changes in price and implied volatility. So I'm going to look at gamma notional for SPX, SPY, NDX, and QQQ. And note for SPX, the number is still positive, but less so than yesterday. Yesterday, gamma notional was 393, and today it is 180, so shifted a little bit lower. And for SPY, gamma notional was still negative yesterday at minus 131 and shifted much more negative today to minus 596. We'll take a look at the Vanna model for SPY in just a minute and see what that means. And then for QQQ, gamma notional 62, slightly lower than yesterday. Really more of a neutral position for QQQ. All right, let's take a look at the Vanna model so we can take a graphical representation of what this means. So remember, in a negative gamma environment, traders are long puts, market makers are short puts, and they have to trade with price to hedge their delta exposure. In a positive gamma environment, traders are, for an index, traders are short calls, market makers are long calls, and they have to trade against price to hedge their delta exposure. All right, let's take a look at the Vanna model, and we'll take a look at SPY. What this chart is showing is market makers delta notional, and showing how it changes with changes in price. That is shown by the light gray curve. And then the purple curve is showing how market makers delta notional changes with changes in price and implied volatility. And that change in delta with the change in implied volatility is the Vanna effect. That's a second order Greek. So what this chart is showing is, assuming a delta neutral position at the beginning of the day, if price decreases, market makers will have to sell futures to hedge their delta exposure. They want to remain delta neutral. Their delta notional is increasing as implied volatility increases and price drops, and they have to sell futures. So let's go back to Bookmap. Oops. So the S&P 500 reversed lower around the 453 level, traded down to 450. Let's go take a look at the Vanna model. So here's 453, still in a pretty neutral position. And then if we move down to 450, it looks like market makers were, this is not steep like further down the curve, but market makers in this move, their delta notional was increasing, and they had to sell futures to hedge their delta exposure. So remember, this works both ways on this negative gamma portion of the curve. Remember, gamma notional for SPY was minus 596 at the beginning of the day. So I always like to keep that in mind as I'm watching price, changes in price and applied volatility during the day. All right, so for today, my thesis, I was really looking for lower volatility, not as low as yesterday. Gamma notional did become moved down, or less positive for SPX, more negative for SPY. And based on the shifts higher in the levels, looking for more of a grind up. And like I say in the beginning, I look at order flow and hedging flow to confirm my thesis. With a bullish thesis, the order flow and hedging flow did not confirm that thesis. So let's get to some setups now, and we'll see why. All right, so this is the S&P 500 hero signal. This is from Spotgamma, provided to Spotgamma subscribers. This chart is showing, and this is showing hedging flow. This chart is showing price for SPX, and then options trades and market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures. So if you look at any form of the S&P 500, this is typically what you want to take a look at, but there are some recent advantages to looking at SPY, and we'll take a look at that in a minute as well. All right, so that is the hero signal, hedging impact real-time options. All right, let's zoom in on this chart. I'm going to zoom in on the morning just a little bit. I don't know what this, some problem with the data. I'm not sure what that is. But anyway, that's the cash open, the 9:30 cash open. And hello, Vihu. Glad you're here. Welcome. All right, so this is the hero signal. And just after a few minutes, options traders started taking negative delta positions. That set up that initial short. We'll take a look at SPY in just a minute and see there was another clue as well. And then a very clear divergence in the hero signal and price right around 10:15, setting up a great divergent short. It took a few minutes for that to play out. Hello, Trade and Sale. Welcome. Glad you're here. All right, so two great short setups with more of a hero confirmation here just at the cash open, and then also at 10:15 with a nice divergent setup. Very clear divergent setup. The reason I look at this is I believe that options trades and market maker hedging activity are a key driver of price in the in ES futures, NQ futures, as well as many stocks that we'll see. So this is a very important part of my process to look at this. Let's take a look at SPY. I'm going to zoom in on this chart. this is something new. It's still in beta, and it may be hard to see, but there are flow alerts. And this is indicating, I guess, a high amount of hero flow. So there's the first alert at 9:34. Let's just zoom in on that so we can see what was happening at 9:34. So just looking at this at the open, this flow alert comes in. And Brent at Spotgamma has talked about this a little bit, looking for potential reversion to the mean. So that flow alert comes in and price moves lower. All right, let's zoom back out. So that was 9:34. And we'll take a look at the clues in order flow as well. And then this is the second alert at 10:24 right here. And that was a clear divergence setup, just like the total signal for the S&P 500, with this additional confirmation of the alert there. All right, let's go take a look at the book map. And I have the two alerts, SPY alerts marked. And you can see from the book map chart, these were great alerts for a short. All right, let's zoom in on this, and we'll take a look at the clues in order flow. So first of all, I'm going to concentrate on the volume dots, and you can see the shift from aggressive buyers there shown with the green volume dots. That's market buy minus market sell. All right, JJ asked, the flow alert is only in SPY, Hero. No, it's available. It looks like it's for all stocks. Now, I have not seen it on the combined signal for S&P 500 or NASDAQ, but I've seen it on a variety of stocks. So there's the first alert signal, signaling the reverse at the upper daily expected move. We're watching the shift in order flow. Green dots, a lot of aggressive buyers there, market buy minus sell, and then the aggressive sellers come in pretty quickly and price drops sharply. You can see the shift in cumulative volume delta. That's shown by the dark blue line that shifts to pink as the number turns negative. Joel, I don't know if it works for NDX. It does work for QQQ. All right, let me check for questions in YouTube. Vihu asks, when I start analysis on stocks, please take a look at, please review Hero and Bookmap data for Tesla and NVIDIA. Those are both on my list of stocks to take a look at. All right, Truman asks, when Hero is rising at 11:15, would you stay in the trade for SPX? Wouldn't want to get out then? I'll take a look at that. So let's take a look at 11:15. So we know we have two great short entries. I have them marked. The first one with the SPY alert. Here's the second. You can also see the confirmation with order flow. Aggressive buyers on the way up right to the 453 level, and then aggressive sellers start to come in and price moves lower. And there is some consolidation around 11 to 11:30. So yeah, I mean, that would be a good place to take profits. All right, Trade and Sale asks, how do I get this new feature? So it is in beta right now. I'm part of the beta group. I think if you're interested in becoming part of the beta group, just send an email to info@spotgamma.com. So again, if you're interested, if you're a Spotgamma user, if you're an alpha subscriber, if you have access to Hero, you want access to the flow alerts, again, they're still in beta, just send an email to info@spotgamma.com. All right, so 2 short setups. All right, so Truman, if you got in right around 453 down to 451, where we'll take a look at Hero in just a minute. That certainly would have been close to 20 points in ES. It would definitely make my day. And then watching this, you could enter again for another 10 points down to 450 and toward the 450 level. All right, so that's more trade management. That's really up to you. I'm just kind of showing the entry points, how clear they were. All right, so let's go back to Hero now. So right now we have Hero for SPY. So Hero does turn up for SPY around 1055. Price consolidates. This flow alert comes in, and then just a few minutes later, price moves lower again. Let's go take a look at just the S&P 500 signal now, or the combined signal now. So this combined signal is pretty choppy today. So Truman, I'm not sure. Hero rising at, this looks like the same as SPY. Hero rising around 1055. And then around 1130 starts to drop again and price moves lower. All right, let's take a look at NASDAQ. I'm going to take a look at a combined signal here. Zoom in right to the open. So assume you're looking at this just at the open. And Hero definitely bearish. Traders taking negative delta positions. Price responds lower. So that's the first setup, just like SPX or the S&P 500. And then this is more of a confirmation short, as options traders stop taking positive delta positions and start taking negative delta positions. All right, let's go take a look at NASDAQ and Bookmap. Oops. So pretty similar setups. And so trend break here. A lot of aggressive sellers come in. Oops, wrong tool. Aggressive sellers. So let's see, I have these marked, and let's see if there were flow alerts for QQQ. So for NASDAQ or the S&P 500 signal, the combined signals, I have not seen all right, so I don't see any, I have not seen flow alerts for the combined signals, and I have seen them for SPY, QQQ. I don't see any today for QQQ. All right, let's go back to Bookmap now. So pretty similar price pattern for NASDAQ as the S&P 500. All right, let me check for questions. And Truman asked, so the turn from taking positive delta positions to negative delta is important. Yeah. I mean, that's one thing that I look for. So I'm looking at order flow in Bookmap and hedging flow and Spotgamma Hero. I'm looking for some confluence confirmation of a short or long. So again, when traders, let's say when traders are buying calls, market makers, that's positive delta, market makers sell calls, and they have to buy futures to hedge their delta exposure. And just the opposite, if they're buying puts, that's negative delta. When traders buy puts, market makers sell the puts, and they have to sell futures to hedge their delta exposure. So it takes some experience to look at this and put it all together. So that's what I'm trying to do now in this webinar. And it's not always clear. I mean, there's sometimes options traders are not in charge, not controlling price. Other times they are. All right, JG asked, how do I differentiate between the real flow using Hero and the short blips? I often get thrown away with the short blips with real trends when there are sharp movements. That can happen. I typically look at the trend of Hero, especially for NASDAQ and S&P 500. And I like to look, sometimes that trends will give you a clear divergence setup. Let's go back to the S&P 500. So I'm looking at Hero making a series of lower highs and then looking for a potential reversal for the S&P 500. Sometimes it takes, so today that took 45 minutes to play out. So you just have to anticipate. Remember, that was the reversal lower at the SPY 453 level. Let's go to SPY. I'm going to have to do a refresh. It looks like it's lost the alerts. Back to my watch list. All right, so this is where these alerts come in handy, I think. So we already know that. We'll just zoom in on this. So here's the SPY 453 level. Any round number for SPY or QQQ could potentially act as support or resistance. So a potential resistance level, we know that Hero is making lower highs, at this point right here, just around 1015. Hero is dropping pretty nicely. So that's one confluence. I know price is heading to a round number level that could potentially act as resistance. Then I'm watching order flow and Bookmap. So I'm in my presentation, I'm shifting between Hero and I can only present on one screen. I'm shifting between Hero and Bookmap. When I'm really trading, I have 3 screens, and I have Hero on one screen, Bookmap on another screen, and execution platform on another screen. And I use different platforms for futures, options, and shares. All right, so let's go back to Bookmap now. Let's go back to ES. Let's zoom in on this. So there's the SPY 453 level. And I can see the shift in order flow here on my chart. So I know that traders are taking negative delta positions. Market makers have to sell futures to hedge that. And I can see the shift in order flow. It's pretty clear. Aggressive buyers up to that level. And then aggressive sellers start to come in with these. You can see the shift to the pink volume dots. It takes a while to play out. That's pretty typical of the S&P 500, not sharp reversals like some stocks. All right, so there is the reversal. Again, it takes time, not not clear. What one easy way to trade this is just to buy a SPY put, buy an SPX put, buy a SPY put spread, or buy an SPX put spread. Anticipating the reversal, you don't have to be precise with your entry, and just wait for it to play out. And I'm leaning more and more towards that approach to trading, especially with stocks like Nvidia that move around so much. It's pretty easy to get stopped out, and an easier way to play stocks, anything that moves a lot or takes a while to this rounded reversal like the S&P 500. Just trade options. If the defined risk, either long option or long spread, and let it play out. All right, so JJ says, by looking at the slope of Hero, oh nice. So once you see such divergence, you anticipate and prepare for the trade. Yes, exactly. So that is exactly what I do. So I'm, again, watching Hero on one screen and Bookmap on another screen. I see that clear divergence and just waiting for a reversal. So there it is. Again, it takes time for the S&P 500. All right, so John asks, I still do not understand market makers have to sell futures. Why is that true? All right, so let's take a look at an example of SPX. So market makers want to remain delta neutral, first of all. So when traders buy or sell, let's say that traders are buying SPX puts. Market makers want to remain delta neutral. They're selling puts. That is a positive delta position. Market makers are taking the other side. They want to remain delta neutral. So the only way they have to hedge an SPX options trade is with futures, ES futures. Now with SPY, they could share with hedge with SPY shares, but it's much more efficient to hedge with ES futures. One ES contract is equal to 500 SPY shares. So John, I hope that answers your question. Market makers always want to remain delta neutral. That's their job. They're just making markets and want to remain delta neutral. All right, let's get to some stocks now. So today, I want to focus on a list of stocks. This is my watch list. This is Equity Hub. And what I'm going to focus on is this next expiry gamma percent. And this is a weekly expiration, not a monthly expiration. But for certain stocks, it's worth taking a look at this every week. So this is for NVIDIA. We notice that 42.65% of gamma is expiring today, 9:01. What traders typically do in stocks like NVIDIA, at the beginning of the week, they will start buying calls in these stocks. That drives price higher, and then these calls expire on Friday. So as expiration approaches, they start to lose value. That is charm. The change in so as expiration approaches, they start to lose value. Delta decreases. When traders buy calls, market makers are short calls, and they have to buy stock to hedge their delta exposure. When their delta exposure drops due to this approaching expiration, the charm effect, the change in delta with a change in as time passes, those calls start to lose value. Market makers can sell their stock hedges. And note that this chart is showing call domination for NVIDIA above 498. So in this green level, green area, calls dominating. As price drops, these calls are quickly losing value due to charm. Market makers can sell their long stock hedges. All right, so let's take a look at NVIDIA now. We'll go to Hero. So this is called a call gamma unwind. This is a very reliable setup. So let's go to NVIDIA. I'm going to zoom in. So notice pretty much from the open, maybe 5 minutes after the open, traders start taking negative delta positions. Let's see what they're doing. So they are selling calls. That's shown by the falling orange line here. So if they're today, with all these calls expiring, if traders are not aggressively buying calls, NVIDIA really has no choice but to drop. So traders selling calls, NVIDIA drops pretty sharply. And notice here this flow alert that came in for a secondary entry. If you missed the open, let's go take a look at Bookmap. All right, so nice drop all the way down to 482. Here's where that alert came in. Actually, let me zoom in. So here's that alert that was shown in Hero. Great entry point, and then the next entry point at 490, short at 490. So this is a great example of a call gamma unwind trade. And you can anticipate this again by going to this list in Equity Hub and just ranking. So I've ranked my watch list by this next expiry gamma percent. The next is Netflix. So let's go take a look at Hero, and we'll take a look at Netflix. And we'll see why the call gamma unwind did not work for Netflix. Traders are buying calls. Let's zoom in on this. SKG Gango ask, how do I activate alerts? So the alerts are still in beta. If you have access to Spotgamma Hero, or if you're an alpha subscriber, just send an email to info@spotgamma.com and ask about accessing the beta alerts. Or let's just see. I want to see what traders are doing today. So it looks like this, I'm showing next expiry, which for Netflix would be today. You're welcome. So they are buying calls that expire today. That's shown by the green line, and they're also buying calls further out in expiration. That's shown by the orange line. So it's possible that they are rolling out some of their calls. All right, so call gamma unwind working for NVIDIA, not so much for Netflix, at least early in the morning, or the first morning session. And then notice as this hero levels off, price drops. So aggressive call buying in the morning, driving price higher, and then price stalls as they take their foot off the gas. All right, let's go to Tesla. Tesla is a little bit further down on the list, but still 29%. The threshold that Spotgamma usually looks at is 30%, but 29, close enough. Notice the call domination above the 260 strike, which is the key gamma strike, also the call wall. All right, let's go take a look at Hero now and see what options traders are doing. So here's the 260 level. Looks like from this chart the price did not quite reach that. So in the morning, traders were selling calls. They started buying calls around 11 o'clock. But in the morning, definitely selling calls. Let's go take a look at Bookmap. Go to Tesla. All right, the downtrend continues in Tesla. And notice the initial move in the morning driven by call sellers, options traders, and also notice the aggressive selling here in Tesla. We can take a look at cumulative volume delta. Just this whole chart of magenta volume dots. These are aggressive sellers. Cumulative volume delta negative from the open, continuing straight down. So aggressive sellers definitely in control today for Spotgamma, for Tesla. All right, let's go back to Hero. Let's actually go to the total signal. So initially, options traders helping to drive price lower, they start buying right around the 242.50 hedge wall, but aggressive sellers keep pushing Tesla lower. So notice it looks like price did level off somewhat, and then as options traders start to join the party again, Tesla moves lower. That's around 120. So let's go back and take a look at Bookmap. So we can see that is the case here. The slope of the downtrend stops a little bit. It's less steep, and then as options traders start to join the party again, Tesla moves lower. All right, so SKG Ango asked, how do you make your daily watch list for day trading from the info given by Spotgamma? So I have a watch list that I don't change. I use all the time. Let's go to, and you can see the stocks, the instruments that I trade on Bookmap here. ES, NQ for futures, and then these are the large cap tech stocks, the Magnificent 7 plus AMD, and then also I have SPY and QQQ on there. So I pretty much stick to these instruments for trading. Large cap tech, and then the S&P 500 and NASDAQ. All right, so here's my watch list, and I have this in Spotgamma. And you can see the entire watch list here. So in this watch list, I have added some instruments that I don't have in Bookmap. I just want to see what they're doing. For example, IWM, the Russell, and then also the combined signals, S&P 500, NASDAQ, as well as the indices, NDX, then the S&P 500 futures. Here's SPX somewhere. So the stocks that I trade plus some additional information here in my watch list. So this is, really doesn't change that much, or has not changed for some time. All right, let's take a last look at the S&P 500. So the overall trend now has shifted back lower for Hero. So today traders are buying calls, as shown by the rising orange line, the positive notional value there. They're also buying puts. Put buyers, much more aggressive. 3 billion, negative 3 billion. That's notional value versus 1.5 billion positive. So this is another way of looking at Hero that clarifies what is happening today, provides a pretty clear signal that put buyers are definitely driving price. And again, John, when traders buy puts, market makers sell the puts in SPX, SPY, ES, and they hedge their delta exposure by selling futures. All right, so that's the S&P 500. Let's go take a look at Bookmap. Now price ES may be finding support at the SPY 450 level. Oops, wrong tool. All right, so the good trades were in this morning, and you're welcome. Let's take a look at NASDAQ. Notice the order flow remains bearish. Cumulative volume delta still sloping down. The yellow line showing stop orders also sloping down. Let's see what options traders are doing for NASDAQ. And this signal is more clear that options traders, you can just see the overall slope of the hero line here for NASDAQ is definitely bearish. Traders, again, buying puts and buying calls. Put buyers more aggressive, definitely driving price action today. All right, so Frank says it seems Hero does not work well for Tesla. Is it because people sell stocks? Yes. So one thing you want to try and do is determine what is driving price action. Let's go to Tesla. So I talked about options traders helping to drive price lower. Then as options traders started taking positive delta positions, price leveled off somewhat and then started to slope lower again, started to move lower as options traders started taking negative delta positions. So you have to understand what's going on here, how to interpret this, and at the same time, let's go back to Bookmap, go to Tesla, and this is definitely bearish. It's about as bearish as it gets. Just looking at this falling cumulative volume delta, I would certainly, even with rising hero, I would still most likely be looking for a short, or with all these pink volume dots. Anyway, the good setup was in the morning with the clear confirmation from hero. Here's that consolidation as traders started taking positive delta positions. So you're just putting a narrative together. So you see hero rising, price not rising. You see the very bearish order flow, falling cumulative volume delta. It gives you a sense that options traders are, during this time period here, not really in control of price. All price is able to do here is consolidate, not move higher, as traders are taking positive delta positions. All right, let me take a look at a couple of final questions in YouTube here. All right, so SKG Gengo asked to get the best estimation of the direction of the market in order, which one is better, ES Futures, SPX, SPY, or should one look at all three? So I don't know if you're talking about Bookmap or Hero. If you're talking about Hero, I look at the combined signal, but I have started looking at SPY because of the hero alerts. All right, so let's go back to SPY. Again, remember the hero alert. So I'm watching the alerts here for SPY. But in Bookmap, for any, if I'm trading any form of the S&P 500, definitely looking at ES futures. There's way more information here. I have stops and icebergs, just way more information than on the SPY chart. So if I trade any form of the S&P 500 in Bookmap, I'm looking at ES. All right, so John asked, so because ES, SPY, SPX prices were up this morning, not very long, market makers had to sell ES futures to lower to remain neutral. So market makers are responding to what options traders are doing right now. Let's go back to hero. And just looking at SPY here, overall traders, oops, wrong tool. Traders taking negative delta positions. So this means that traders were buying SPY puts, market makers were selling the puts, and they had to sell futures to hedge their delta exposure. That's not because of price. That was that price changes in price and volatility. I talked about that with the Vanna model. But overall, traders were buying puts. Market makers are selling the puts. That's a positive delta position, and they have to sell futures to hedge their delta exposure. So John also asked, when NVIDIA was up too much this week, market makers had to sell NVIDIA to remain neutral. So when traders were buying NVIDIA calls during the week, market makers were selling the calls. Remember, they're always taking the other side of the position, and they have to buy stock to hedge their delta exposure. Traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure, since selling calls is a negative delta position. And then as Friday approaches, those calls that traders are long, especially the out-of-the-money calls, are quickly losing value due to charm, the change in delta with it as time passes, and market makers no longer need their long stock hedges. And if traders are not aggressively buying calls today, if they're actually selling calls, market makers can buy back their short hedges. All right, so John, I hope that answers your question. All right, my time is up. I want to thank everyone for watching. Thank you very much for your questions and comments. And remember, Monday is a Labor Day holiday in the U.S. The futures market is open in the morning, but the stock market is closed all day. I will not be streaming. I will be in chat during the day on Monday, but not streaming. So I will see everyone on Tuesday. Have a great weekend. Have a great holiday weekend. And I will see you on Tuesday. Thanks again. Bye.